Hi, traders. This is Brad Gilbert with the FX Market Insight for Tuesday, the 26th of March. Now, as expected, a very quiet start to the week. The currency pairs, to start the Monday, we're pretty much sort of discombobulating. And what that means is, the major pairs like, say, Euro, Sterling, Aussie and Kiwi, for instance, they generally correlate. The correlations were completely broken down. So, today, they're almost back into sort of a correlation mode, but they are just drifting sideways. So that's, that just tells me that the data from last week, in particular Friday, has now been factored into the market, and that's where they're currently sitting. They're waiting for the next fundamental driver to give them a kick. Unfortunately for us, there's no major, or the core market drivers are still the two big geopolitical events, Brexit and also the simmering China-US relations. I expect that to sort of take off any day. But that's where we are at the moment. So you look at the technical outlook for the major currency pairs here. Now, this technical outlook is a combination of mainly hourly and daily charts. What we're looking for is a match here with the both timeframes to give us clear direction. Now, the dollar index back trading sideways. Dollar yen is still sort of flapping on the downside. Dollar CAD is drifting sideways, but it has already broken up. So that's sort of sitting up there as well. And that's the same for dollar Swiss, which is just on the downside. It's drifting sideways on the hourlies, but daily charts, it has broken down. Now, the one little surprise packet that's been popping its head up is the Kiwi, right? The flightless bird. This sucker here has sort of broken higher on the daily and weekly charts. It is sort of, I know it's sort of drifting sideways a bit on the hourlies, but you know what? Overall, to me, it's got a slightly upward bias. And this is going to be very important as we come into Wednesday's RBNZ interest rate decision and statement. And that'll follow on obviously with the Kiwi data, which is coming out throughout the next few days. So keep an eye on that Kiwi. It is a major focus going into the week. Now, looking at where a major change in direction here, what we're looking for is momentum in these currency pairs. Which ways are they going to go? Now, the only major things that we have got coming out is the housing starts number, right? That's one of, it's a series of three numbers. Now, you can hold positions through this number, but just be aware if there is significant variance, we may see the US dollar get some sort of direction, but it has to be significant because at the moment, the dollar is just drifting sideways. The CB consumer confidence numbers come out a few hours later. That will be potentially a little bit more important, okay, overall consumer confidence. You just need to be flat before that release, but you can trade straight away. So it's just a matter of if you have got open positions, close them and then just put them back on. So we'll see how that number comes out. But overall, once again, we've got very little information to work with at the moment. And if I just bring you across, just to give you a quick look at the headlines going around at the moment, France are doing some deals, as you'd expect. I mean, there's no sort of love lost. I mean, they've always been doing their own thing with China. Now, I reckon this is a really good comment by Evans. Okay, so Charles Evans here says, flatten yield curve, reason to be nervous, but US economy solid. Now, there's been a lot of media talk lately about the inverted yield curve, 2-year, over 10 years. It's just ridiculous. It comes back down to that level all the time. Okay, the yield curve flattens and then moves away. It does it all the time. So, I mean, this is a smart comment. The whole idea of if the yield curve inverts, then it's, signals a recession. But you know what? The US economy is strong. So I think that's a pretty good thing. And one thing to note here, I'll just show you the charts in a second, but the euro, right, that slight down move last week from the German manufacturing data has been somewhat diffused by the some German business survey numbers, which were better than, just a little bit stronger. Okay, and that's sort of really diffused the downside there on euro. So with euro, there's that move down on the downside. Let me just make that pen a bit thicker. Okay, so you got that move down. Now, the business survey numbers haven't really completely diffused it. Otherwise, it'd be back up to this level here. But it has taken the pressure off the downside. Little false break here on Monday, as you commonly get on Mondays. It's not a great trading day. And the Aussie's back in the range. Here's the Kiwi, the little battler. It's sort of just still wants to go higher in my books. Dollar yen broke downwards, now trading sideways. Sterling, Brexit, well, good luck with that. And dollar CAD, it has broken higher. I know it's trading sideways at the moment, but on the daily charts as well, it is teetering with a potential break up towards 135, the figure, if it can get back above 134.20. So just keep an eye on oil. Oil's come back a little bit, rallied a buck, and that's sort of slowed down the topside rally. And that's where we are, guys. It's slim pickings at the moment. So just be patient. Wait for the key opportunities to come, because you know what? Come Wednesday, tomorrow, it's going to get really busy, especially on the Kiwi. We got Draghi speaking, and this is where the week really starts. And it's not uncommon to have really slow starts early in the week, and then things to really pick up. We've got some final GDP numbers out of the US, out of the UK, and GDP numbers out of Canada. These are all big numbers, right? So hold your horses, remain calm, and wait for the good trading opportunities to come. All right, guys, have a good one. I'll see you in the 247 trade zone. Cheerio.